Hello and welcome to this earnings interview of India's largest IT company, TCS, which has just reported earnings for the third quarter. Now, on the face of it, it appears to be a mixed bag of sorts. So, if you look at their revenue in rupee terms, dollar terms, it has declined quarter on quarter. Remember, the third quarter is also seasonally weak. But if you look at their PAT number, it's up 4% quarter on quarter amid better operational efficiencies. But what's positive is the outlook and commentary from the management. And to really understand more on the outlook ahead, we are joined by its CEO, Krithivasan. Thank you very much, sir, for joining us on Money Control. Also joining me on this interview is my colleague, Debangana Ghosh. Thank you very much, Krithi, for talking to Money Control. So let me start with, Q3. On the face of it, it was a slightly underwhelming quarter. Also, Q3 traditionally because of furloughs, other reasons, doesn't do too well. But if I look at the other indicators you have given, whether it's TCV of over $10 billion, you've said hiring will continue to be very robust, campus hiring. And you've also said that CY25 will be better than CY24. Give us a sense of what you're seeing currently in terms of the demand. Because, your overriding message seems to be, hey, don't look at Q3, but look at our outlook going ahead. It's positive.
Yeah, that's precisely the point, Chandra. Like you look at our TCV, TCV has been very strong. And even if you split the TCV further, uh, almost all geographies, almost all industry verticals, our order booking has been good. And when you look at the overall pipeline, that continues to be robust. In fact, in places like Europe, the TCV is probably the all-time high what we achieved in this quarter. And the other indicator is type of projects or engagements what we won as well as in the pipeline. We are seeing that more transformative engagements compared to the past. It's not that there is no optimization engagements. Optimization engagements continue to be the mainstay, but there is an increasing percentage of discretionary project in our pipeline. The another side we looked at is the deal cycle. We found that this is the first time in a while that the deal cycle also decreased by a few weeks, which also we look at as a positive indicator. So all these things broadly give us the confidence that there are early signs of revival of discretionary spend, and there could be some positive bias in terms of technology spend in next year.
Right. How worried are you about, what's going to happen once Trump takes charge in the US? And let's set aside the visa part of the equation because, he has indicated tariffs and people fear that tariffs could lead to an inflationary environment in the US, which will, again affect interest rates, impact corporate spending. Have you baked that into your forecast? What are clients telling you, as you speak to them? Because in the next few months, they will also firm up budgets for the next year.
See, the our discussions with our customers, most of us and most of our customers believe that the policies would be towards re- in accelerating the US economy, giving it a positive boost. So given that is more likely option and likely scenario, our customers tend to be at this time positive. I don't think they believe that uh, the end result of the policies, or at least the objectives of the policies, would not be to grind it further down. There will be always the interest to how do you enhance and accelerate it further. Given that broad sentiments, I mentioned in other meetings also, one or two industry verticals, particularly life sciences, healthcare, they are looking to see what kind of policies come in terms of insurance, Medicare, and all. But industries like banking and retail, there is a better consumer confidence at this time, and so their current position is to enhance the discretionary spend. But of course, none of us can guess what specific policies any new administration will bring in. But we have to react based on what they do. But at this time, the going in position is it's going to be net positive.
And the whole discussion around H-1B visas, which has, sort of increased in the last week. The good news is Elon Musk is a votary of, skilled talent coming to the US. But how worried are you about that discourse?
Uh, that we are not very worried. Like we have been less and less dependent on H1 over the years. If you look at our US workforce, it's more than 50% local.
Hmm.
And on any given year, we get about between 3,000 to 4,000 H1. So, in our overall scheme of things, it's a small number. If there is a decrease in H1, we can compensate with other means, or we can move the work to more work to India, or we can find other means. So, our dependence on H1 is not very high.
Got it. Debangana?
Right. Krithi, I want to touch upon the BSNL deal. I was reading a recent report by JM Financial which said that the revenue contribution coming from the BSNL deal has run past its peak phase. So I wanted to get a sense of where is this deal at this point, the project in terms of completion, and how do you plan to replace it? And also how much of revenue growth decline this quarter, I mean, probably got impacted by the BSNL deal revenue slowing down.
So, from a overall status of the project, almost I think 70,000 sites have been installed, and 60,000 of them are carrying commercial traffic. And we hope to complete it by Q4 or Q1. So the most of the revenue will also run down Q4, Q1, maybe some amount in Q2. By then, the revenue should run down. And between Q2 and Q3, there is not a substantial difference in our BSNL revenue. We should see the BSNL revenue tapering down going forward. And as I was explaining before, we seek to replace that revenue uh, either through other international new projects, the new TCVs that we have won, or increasing the revenue through regional markets. We continue to look at opportunities through which we can replace this revenue.
Right. Coming to the India region, in the past couple of quarters, we have seen growth largely being driven by the India market, which has been seeing on the upper end of double-digit growth. This time it was 70.2%. So, wanted to get a sense. So, during the media conference, you had said that the India growth, which came in Q3, was not largely through the BSNL deal, but it was more due to the seasonality benefits that the India market had. So, wanted to understand if this growth is going to be sustainable going forward, and how do you plan to expand the India business?
Definitely, see, like we've seen that India business like growing quarter after quarter, and also the business growing in terms of we have enhanced our focus. See, traditionally, our India business has been BFSI focused, like services, right? And we are reaching out to other industries. We are bringing our global talent into India so that we can bring in the global value here. And one is India. Similarly, we are expanding our sales operations in Middle East, Africa, Latin America, Asia Pacific, ASEAN countries. So we are broadening our regional market sales as well as delivery capability. So our belief is all in all, not only India, digital markets put together as a group will be able to help us in substantially replacing the BSNL revenue. But the rest of it, we have to depend on global revenue.
Right. On the one hand, your commentary on hiring for next year was very positive. That TCS is on track to onboard 40,000 trainees. But on the other hand, if I look at headcount for the current quarter, it's shrunk by I think 5,370 in Q3, reversing 2 quarters of growth. And during the press conference, you said that it's no longer apple to apple headcount growth and revenue growth. Why is that? Are we seeing more automation? Is this impact of AI? Just want to understand why this is happening.
See, I think what Milind was explaining is there is no immediate linearity between revenue and headcount. There will be long term linearity, like may not be in the same slope. There will be some long term linearity, like over a period of time, revenue has to go, headcount has to go, may not be in the same speed. But if you take quarter to quarter, see, for instance, we hired more employees in Q1 and Q2, expecting a faster growth revival. And we also knew that Q3 is going to be a seasonally weaker quarter. So we try to employ mechanisms towards optimization, which results in like you don't hire as in the same speed, or you stop hiring for a quarter and you let the attrition run its course. Your headcount comes down because you also want to ensure that your utilization goes up. You are able to control your margin. So this will be in action continuously. Like you look at what is your outstanding demand. You look at what is the outstanding pipeline of employees that are ready to join, and what kind of projects that are you have to start in a given quarter. You balance it. That's the reason we say don't look at quarter to quarter hiring to make a guesswork on the demand environment. But a long term, definitely, we are not saying that equation of having people, more people to do more revenue is broken completely, but it may not be in the same slope.
Got it. Kriti, overall, it's been a pretty bleak year for IT services. In fact, in the last few days, we've been reporting on your peers either deferring hikes or, giving very low single digit hikes. Do you think next year will be better? Because, this is ultimately the biggest employer for engineers passing out in India. So, can we expect a better year, not just for TCS, but the IT sector broadly? Have the effects of Gen AI settled down? Will US start looking up? Will discretionary spending start looking up?
I can talk definitely for TCS at this time. We believe that next year should be a better year. And as I said, we said we'll be hiring now. So uh, that's what I can comment, Chandra, at this.
Can we expect you to swing back to double digit growth?
We aspire to.
Because I think this year it'll be mid single digit kind of figure going by the current run rate.
Definitely, double digit will continue to be our aspiration.
Debangana?
Just had a quick follow-up there. You mentioned that the discretionary spending has started to revive. So will we see H2 of FY20, the deal mix overall kind of start to change in that sense? Because previous deals have largely been vendor consolidation kind of deals, cost takeout deals. So is that
If the trend continues, Debangana, what you said is, as I said, yes, we saw some yearly revival. Okay, if the trend continues to hold, you will definitely see the mix in a more transformation, less optimization. But we have to wait, and we hope the trend continues as the year.
Final thoughts in terms of the domestic demand environment. How does it look like? And in terms of Gen AI, also, are we seeing bigger quantums of deals coming into the market? Has it moved way beyond POC? Will we see more of this in the next fiscal? What are your thoughts?
See, one is there are definitely moving beyond POCs. We find more and more programs going into production. There are multiple kinds of deals. There will be some small deals. There are also what is we are over a period of time. What you are likely to see or large deals where AI plays an important component. That may not be a AI project by itself, but there could be a large project where AI plays a very important component. So that's where I think it will directionally go. But I am finding it's becoming more and more mainstream. The one reason we stopped publishing the AI specific numbers is it's becoming more pervasive, right? It's you find it everywhere.
It's more of a horizontal play than a vertical play. Anything else, Debangana, from your end?
No, I think that's good.
Great. That's it from us. Thank you very much, Krithi, for joining us on this earnings interview on Moneycontrol. Here's wishing you a great year ahead.
Thanks, Chandra. Thanks, Debangana. Thank you. Have a great day.
Thank you. Thank you.